Hello and welcome to today's Greenstone webinar on how to comply with streamlined energy and carbon reporting. My name is David Wynn. I'm the Head of Client Services at Greenstone, and I'm joined today by my colleague Ella Perriton, who's the Sustainability Consultant at Greenstone. Thanks for attending today's webinar. We're using GoToWebinar for today's session. So if you have any questions as we're going through in the next half an hour, then please use the GoToWebinar to send questions through to the team here. We'll be going through today what the following agenda. So at any point, if you have those questions, please send them through. We'll be following up afterwards with some FAQ documents, and we can obviously get back to individuals as well if there are specific questions about how the SECR regulation impacts your businesses. So in terms of an agenda, firstly, we'll have a look at what is SECR, and Ella's going to take us through who needs to comply with that and what you need to do to report and how. Following on from that, at the end, I'll be having a look at a few top tips on how to prepare your organization for SECR reporting, and have a look at, if you've already done that, how you might look to improve on the future, and look at some of the options around software systems and tools to help with some of the data management side of things. Great, so I'm going to pass over to Ella to take us through the first section of today's webinar, explaining all about what SECR is. So Ella, over to you.
Thank you, David, and thank you to everyone who's been able to join this webinar today. So as David said, I'm just going to start off with a quick summary of SECR for all those who aren't currently familiar with the regulation. So SECR stands for Streamlined Energy and Carbon Reporting. It's new regulation which came into force on the 1st of April of last year, 2019, and it's part of the government's clean growth strategy. The main aim of this new regulation is to simplify the energy and carbon reporting landscape for the UK. In turn, this regulation has been designed to increase awareness of energy costs within large organisations and also enhance the visibility of carbon reporting to key decision makers. Additionally, the government hopes that as a result of this regulation, organisations in scope will have gained access to the right data in order to adopt more energy efficiency measures and ultimately reduce their impact on the climate. Having a regulation that is based on the simplification of reporting also aims to reduce the administrative burdens associated with energy and emissions reporting and create more of a level playing field when it comes to reporting. The implementation of this regulation has been timed with the closure of the CRC Energy Efficiency Scheme. This new regulation also builds on the current mandatory greenhouse gas reporting and also complements remaining schemes such as ESOS. The government has stated that any businesses who currently report or have previously reported on any of these schemes should already have much of the information required to report and comply with SECR. This government guideline document that we've linked on the slide is a very good resource when it comes to reporting, so we highly recommend looking through this before starting your reporting journey. So who needs to comply with SECR? So the new regulation affects all UK quoted companies, and this includes companies whose equity share capital is officially listed on the main market of the London Stock Exchange, is officially listed in the European Economic Area State, or is dealing on either the New York Stock Exchange and NASDAQ. Included with this, large limited liability partnerships and large unquoted companies also need to comply with this regulation. And in this case, large companies is defined by any company or LLP who satisfies 2 or more of the conditions listed in this grey box at the bottom. So if you have a balance sheet of more than 18 million, a turnover of over 36 million and over 250 employees, then you will need to report to SECR. So what are the reporting requirements? There are 6 reporting requirements. The first 2 differ depending on what sort of company you are. So we've just separated these off into a separate slide to go into a bit more detail. So the first requirement is to state your energy use for electricity, fuel and transport. If you're a quoted company, then you must state your global consumption. Whereas if you're a large unquoted company or an LLP, then you only need to state your UK consumption. The second requirement covers Scope 1, 2 and 3 greenhouse gas emissions. Again, this is split out depending on what sort of company you are. So quoted companies must report their global Scope 1 and 2 emissions. Scope 3 is completely voluntary but very strongly encouraged. Large unquoted companies and LLPs must report on their UK Scope 1 and 2 emissions. However, on top of this, they must also include the emissions associated with business travel in rental cars or employee-owned vehicles where they are responsible for purchasing the fuel. Now that addition on the end, that last part, it does fall under Scope 3. However, all of the other Scope 3 emissions are voluntary but also strongly encouraged to report on. So the next slide, just moving on to all of the other requirements, which applies to all companies which are encompassed within this. You must report on an intensity metric, also known as a normalization factor. So the examples we've given here are floor area, number of employees, and units of production. You also must include your previous year's emissions and energy consumption figures. However, if this is your first year reporting, which may be the case for many people right now, previous year's figures are not required. That's not to say if you have them, then we would encourage reporting them. It's just not required under this regulation. The next requirement is to include a narrative around the action taken to increase energy efficiency. On the next slide, I'll go over an example of this, a best practice. And lastly, all companies must report on the methodologies used to calculate the emissions. The regulation doesn't give any specification of what methodologies to use. However, for effective emissions management and transparency, it's important to use robust and accepted methods. For example, DEFRA. Just on to the next slide. Here is an example of within the guidelines, the government guidelines, they give an example paragraph of how you should report on your energy efficiencies. So within this example, the government suggests that details must be included around the actions taken and what energy saving this will bring in future years. They've also included details of why you've implemented these actions and also whether you're working towards any voluntary environmental standards. So a good company best practice that we can suggest for this is Royal Mail, one of our clients. They're already including a narrative within their annual reports. And within their environmental section, they're including a energy and emissions section, which directly addresses how and why they're reducing their energy use in their buildings and across their fleet. So lastly, how should companies report? So the regulation states that requirements for SECR must be included in companies' directors' report as part of their annual filing. And this applies to those whose financial years start on or after the 1st of April of 2019. However, that being said, there's no prescribed format for reporting. Organisations can develop their own format to fit their business, but any format must include the minimum requirements and also be an accessible format. The government gives a good reporting template within that guidance document that we linked in the first slide. So if you'd like some help on exactly how you should structure your reporting, then please refer to the document that we linked. Now just back over to David.
Great, thanks, Ella. So Ella's taken us through an understanding of the SECR requirements, so thanks for taking us through that to get everybody up to speed. We will provide the links in the FAQ document that we send round, so at the points where Ella's referenced particular templates or guidance that's helpful, we'll send that through to people, and you'll obviously be able to access the recording as well. Great, so with that in mind and thinking about SECR, we wanted to pick up on some top tips and have a look at some of the ways in which organizations can start to think about SECR from a best practice perspective. As Ella mentioned, there's estimating 12,000 companies are captured by this regulation. So there's a large population of companies that may not have done this type of reporting before, as well as those old-timers that are experienced with it that may have been captured from previous legislation or just have this as already embedded as part of their reporting schedule. So what we'll do is have a look at a few tips within here. And the first one is confirming and thinking about inclusion and scope. So within the guidance itself, it's important to confirm and have a look at what you're actually required to report. So that's both in terms of the geography, so whether it's your global operations or the UK operations, depending on the type of organization that you are. And then within that, the actual scope of emissions data or energy data that you're including within your reporting. So for smaller organizations, that may be relatively straightforward if they just have one office or location. Capturing that type of information can be quite straightforward. However, for larger organizations where it might be more complex, that's where tools and software systems may be helpful to help aggregate that type of information. So we've just included an example here from the Greenstone enterprise software, just to give an example of how within platforms, if you do have more complex boundaries and structures, they allow you to enable you to be able to create those different data points and structures within a software platform to help manage that information a little bit more easily than an Excel spreadsheet. The other aspect of this is looking at how those boundaries may change over time. So as you progress with this type of reporting, year on year, those structures and boundaries may change. So a platform to be able to have that as a record of reference can be useful, again, if your organization is a little more complex. The next step is to plan your data collection. So in this area here, it's important to understand where your data comes from. So identifying the key stakeholders that you will be relying on for the information to be able to comply with SECR. So some of those stakeholders will be people providing data sets to you. So it may be people in facilities, energy managers. It could be people that are responsible for capital investment projects around energy efficiency. So identifying who those stakeholders are and giving them ample time to be able to provide that information to you. Particularly with this type of reporting, where it's going into the annual financial filings or director's reports, those tend to have very strict timelines and generally little flexibility in terms of changing the date at which those reports need to be disclosed to investors or financial stakeholders. So as a result, if this is the first time that as an organization you're looking to bring environmental or carbon information in, it's really key to understand those key dates and milestones within that process to be able to work back from that and understand what a sensible timeline would be for gathering the information that you need to include within the disclosure. So again, in terms of managing that type of information, often in a smaller organization, it may be you're within the same office or able to easily identify them. For larger, more disparate and complex businesses, it may be that that's more challenging to identify those within there. So in the software space, that's where we see functions and tools like data upload, analysis, dashboards becoming useful, where if you're in charge of coordinating, you're able to then see the data coverage. You can see where files or data is waiting for approval from other stakeholders within the business, and where there are potential gaps within your data that need to be extrapolated or modeled. Great. The third tip is to really think about the calculations and data management. So Ella mentioned about having a robust methodology in place. For a lot of organizations, that will mean using the DEFRA emission factors, which are published annually. So they publish in the summer each year, and they apply for an annual period. So using those to be able to calculate your scope 1, 2, and possibly 3 emissions from across the organization. If you've got, the regulation impacts you where you need to report more widely, so on your global operations, that again brings in more complexity in terms of needing to apply location-based emission factors for different countries where you may be operating with your business. So with that, it's likely you'll use the GHG protocol methodology and then apply a wider set of emission factors. So again, where we see that added complexity coming in, that's where systems will help to help you with that process. So the Greenstone software, we've got emission factors built in, global location-based emission factors to automate that process. And that means that users can focus on the analysis side of the data more so than the calculations, looking at things like dashboards and trends within the data to see actually in terms of what they're disclosing, not just those annual totals, but how different areas of the business might be performing if you've got a certain level of complexity to what you do. Great. The next tip in terms of looking at SECR is to firstly think about doing a bit of a gap analysis on what you already have that can help to comply with the regulations. So it's likely for those that have done mandatory greenhouse gas reporting before, you will have all of this information. Similarly, if you have carried out ESOS audits, so the Energy Savings Opportunity scheme, then you will have a wealth of information around energy efficiency opportunities for your business. Hopefully you've implemented some of those and can be reporting on them in terms of that narrative requirement under the regulation. So it's important to do that. Similarly with the intensity metric that you're using, have a look at what the business is using elsewhere to report on growth or performance to see how that differs and how you can align with that within that. What we often find is that the requirement on reporting on the energy efficiency side, if that's something that you haven't been previously captured by other regulations to do, and that's something that's completely new, then that's something that you need to engage with key stakeholders on to really identify what those projects are and what you might be tracking or reporting in terms of energy efficiency. Again, for smaller organizations, that might be quite straightforward and there's just a few things to include. For more complex ones, that's where you might be using functionality to be able to track that at scale. So in the initiative savings functionality here, that's where you can upload projects in bulk to carry out those carbon calculations on what savings might look like, but also aggregating energy savings that have been achieved or in plan within there. Great, so the final area is or tip around it is just thinking about the quality review process before submission. This ties back into the timeline piece in terms of thinking about pulling the information together, but also who needs to review this information before it goes into the director's report. The financial information that goes into those disclosures is likely to have a very well-established and long process of checking and auditing prior to disclosure. So with this new data set coming in, it may not fit into that same process of review because it might not be the right people to check it. So it's really looking at how you can identify potential variances within the data prior to disclosing it, looking at the coverage and accuracy within there, and comparing that data before it then needs to be signed off by somebody. The sooner you can identify that sign-off process and key individuals, the better within there. And for some more mature organizations, a process of independent assurance on that data may be something that's undertaken. So that inevitably will lengthen the time required to actually check it before it's ready to be published. Great. I've just included a screenshot here on the variance tracker side, just as an example, again, of how tools can be useful to perform that type of information at scale across businesses that might be a little bit more complex in terms of this type of environmental information, just to give you an example. Great. So hopefully some of those tips have been useful, have got you thinking about SECR side. At Greenstone, we've been around 12 years providing sustainability software to organizations to help them manage their environmental as well as their wider non-financial reporting information. So we have a lot of experience in this space in terms of providing the tools and platforms to them, to different businesses. If that's something that you think would be useful for your organization in terms of better managing this data beyond some creaking Excels, which we sometimes see with bigger organizations, then obviously please do get in touch with us. For many organizations captured by SECR, it will be hopefully a straightforward process where actually you can capture that information offline, use DEFRA to calculate that information yourself. So really going through those tips, ensuring you think about boundaries, timelines, sign off, that should help in terms of getting SECR compliant. But as I say, for those that might be more complex or are grappling with data at scale, then thinking about how a system might help future-proof that in future years may be sensible. Great, so thanks for attending today. We've received some questions, so we'll get back to people individually on those. If you do think of any further questions, then please do send them through. We'll be putting together an FAQ document as well. So if there's anything that you've learned on SECR that you think is worth sharing with other people in that FAQ, please do send that through to us, and we'll be putting that together in the coming days to circulate around to everybody. Great, so that just leaves me to thank Ella for the webinar content today and for all of you for attending, and wish you all a lovely rest of the day. Thanks a lot.